Hello viewers, welcome to another financial accounting class in Prof. Bitey's online digital classroom. Today's topic of discussion will focus on bookkeeping and its importance. Let's first try to establish the meaning of the compound word bookkeeping. What does bookkeeping mean? Bookkeeping simply means the systematic recording of financial transactions of an entity in the books of account. In other words, bookkeeping is the systematic process of recording an entity's financial transactions in the books of account. It involves maintaining accurate financial records which form the foundation of accounting. Therefore, bookkeeping is the record-keeping aspect of accounting. It provides the essential data on which accounting principles are applied for the preparation of financial statements and other financial reports. Therefore, anytime we hear or see the word bookkeeping in accounting, it simply means the recording of financial transactions of an entity in the books of account. Or perhaps you may say the systematic recording, which simply means orderly form of recording of all financial transactions of an entity in the books of account. Through proper bookkeeping, an organization can easily track the day-to-day financial activities, ensure compliance with financial regulations and standards, provide reliable data for decision-making, auditing, and financial planning. Also, to establish accountability and transparency in financial management. Now, let's look at the few terms or keywords that were used during the discussion of the meaning of the compound word bookkeeping. Those keywords are books of account, transaction, financial transaction, and entity. Let's start with the first one, books of account. What does books of account means? Books of account are the various records used to systematically document all financial transactions of a business. In other words, books of account are the various books or records that are used by institutions, organizations, individuals to record their financial transaction. They serve as the primary source of financial information for maintaining accurate and organized financial records. Common examples of books of accounts include journal, which records transactions in chronological order, ledger, summarizes transactions by account, cash book, records all cash receipts and payments, purchase book, or you may call it purchase day book, records all credit purchases, sales book or sales day book records all credit sales, petty cash book tracks small daily expenses. Now, what about the next one, which is transaction? Let's also try to understand the meaning of the word transaction as it was used in the discussion of the definition of bookkeeping. A transaction is the act of carrying out a business deal involving the exchange of goods, services, or money between two or more parties, such as in buying and selling. Therefore, anytime we talk about the word transaction, it simply means an exchange that has taken place between two or more parties in the form of selling and buying. In accounting, a transaction is any event that affects the financial position of a business and can be measured in monetary terms, and as such is referred to as financial transaction or monetary transaction or business transaction or even accounting transaction. Therefore, note that financial transaction simply means any form of exchange that has taken place between two or more parties that involve the use of money or the exchange of services or the exchange of goods in the form of monetary issues. That is, financial transactions are those particular transactions that can be quantified in monetary value. Transactions are recorded systematically in the books of account to ensure accurate financial records, which are then used to prepare reports, financial statements, and other accounting information. Therefore, note that transactions can be classified in two forms. One of them is called cash transactions. Cash transaction refers to settlements or receipts made immediately with or in the form of cash or check. Credit transactions refers to settlements or receipts at a later date. Therefore, anytime we talk about transaction, we should know that transactions are in two folds, either a cash transaction or a credit transaction. A cash transaction means a settlement made immediately, either with physical cash or in the form of a check. Whilst credit transaction simply means those settlements that are made on a later date. Now, what about the last term, entity? An entity is an organization, business, or individual for which accounting records are maintained. It is considered a separate unit in accounting, meaning its financial transactions are recorded and reported independently of the personal transactions of its owners or other businesses. Therefore, we can also say an entity simply means an organization, individual, or a business with its own right and responsibility. Examples of entities include sole proprietorships, partnerships, company or corporations, non-profit organizations, and government bodies. Maintaining records at the entity level ensures accurate financial reporting, accountability, and compliance with accounting principles. Now, let's look at the importance of bookkeeping. Generally, bookkeeping is crucial for the effective management, planning, and growth of a business. The importance of bookkeeping include 1. Determining profit or loss. Now, what do we mean by determining profit or loss? That is, it helps to calculate the profit or loss made by the business or businesses at the end of the financial year, providing a clear picture of financial performance. Another importance of bookkeeping is assessing assets. What do we mean by assessing assets? That is, it assists in identifying and valuing the assets acquired by the business. Another importance of bookkeeping is identifying liabilities. Now, what do we mean by identifying liabilities? That is, it enables the calculation and tracking of the business liabilities. Another importance of bookkeeping is monitoring cash positions. Now, when we talk about monitoring cash position, it provides information on the cash available, both on hand and in the bank, ensuring proper liquidity management. Another importance of bookkeeping is tracking of expenditure. When we talk about tracking of expenditure, means it helps to determine the total expenditure incurred by the business. Another importance of bookkeeping is recording revenue. When we talk about recording revenue, means it allows the business to track the income or revenues earned from each transaction. Another importance of bookkeeping is managing debtors. Now, when we talk about managing debtors, means it facilitates the identification of debtors and the amount owed to the business by debtors. Another importance of bookkeeping is budgeting and planning. That is, it helps in budgeting and planning. Now, what do we mean by budgeting and planning? It provides essential data for preparing budgets and forecasting future financial needs. Another importance of bookkeeping is ensuring compliance. Now, what do we mean by ensuring compliance? That is, it helps to ensure compliance with legal and regulatory requirements, such as tax filings and audits. Another importance of bookkeeping is supporting decision making. Now, what do we mean by supporting decision making? That is, accurate financial records provide management with the information needed to make informed business decisions. Another importance of bookkeeping is enhancing accountability and transparency. And when we talk about enhancing accountability and transparency, means it promotes transparency in financial dealings and help maintain accountability among employees and management. Another importance of bookkeeping is facilitating loans and investments. And when we talk about facilitating loans and investment, means lenders and investors rely on accurate financial records to assess the financial health of a business before providing loans or investments. Another importance of bookkeeping is preventing frauds and errors. That is, regular bookkeeping and accounting reduce the risk of financial mismanagement, fraud, or errors. And another importance of bookkeeping is evaluating business performance. What do we mean by evaluating business performance? That is, it allows the business to analyze trends over time and assess operational efficiency and profitability. Therefore, in short, bookkeeping provides a structure and reliable system for recording, analyzing, and reporting financial transactions, forming the backbone for effective business management and strategic planning.